Hello everyone, it is Evan from the Trade Risk on Wednesday, August 19th, here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, individual names, and then just a few trade ideas for the remainder of the week. I've been under the weather recently. I'm just getting my voice back today, so hopefully you can bear with me, and I hope I can make it through this without some type of coughing fit. So let's jump right in here to today's action. We'll look at the SPY ETF that tracks the S&P 500, and today was a pretty volatile day. Today was the Fed FOMC minutes were out today at 2, and heading into the event this morning, we really came in feeling under pressure here. We gapped lower and proceeded to sink lower, traded all the way down to these mid 207 levels in the SPY, and we were doing it pretty heavy on some pretty heavy negative breath throughout the day. Now, after the minutes were released, we definitely saw some mixed reaction. We had this nice topping tail getting us all the way back to 210, and ultimately we rolled back over and closed in the lower 50% of today's action. So I think the interesting thing is we have now given back all of Monday's exuberant pop to the upside. I think Monday set an interesting tone, an optimistic tone when we came in this week on this candle right here. We closed on the highs up at 210, thinking, hey, maybe this is going to be the week where we finally get some upside traction. Yesterday kind of left you in a sort of, either way. It was, you had a little bit of a case for the bullish case there. You had some for the bears, a little something for everybody yesterday. And then, of course, today we saw the follow through to the downside. So the big question is, do we see more follow through tomorrow? It's kind of like it's the opposite of Monday's session, where now we're saying, okay, a poor close. We negated the week's gains, and now we need to see if the bears can continue to push us lower. We really need to see a close below 208. We didn't get that today. That if we did get a close below 208, I probably would have put on some short exposure here. But given the close, given this tail on the bottom end here, it's really just like I told members at the end of the day, you couldn't pay me enough to put capital at risk here, because it's just so indecisive. The market is at a flip a coin spot, in my opinion. It could go either way tomorrow. So I'm just going to sit tight, have some real light exposure on right now, and I'm happy with that. So let's go to some other markets here. The IWM closed again down 1% on the day, still had tail on the bottom end where the bulls did step in and at least support the lows of the day, but still this looks in trouble. You can see the series of topping tails down here below 119.50, so there is some interest. There are buyers down here, or the sellers are drying up, but the bottom line is they need to continue to try and stabilize this market, and eventually like to see us push higher to negate this series of lower highs and lower lows. The Qs, again today, similar situation, didn't close as bad, 63 basis points to the downside. You see the tail down here as well, but again, still a very murky situation at best. So that's where we are with the indices in the current state of the market. Let's look at some other markets. TLT saw a nice bid today, engulfed all of yesterday's action. We gapped down lower, proceeded to push higher throughout the day. So TLT, this uptrend still looks intact. Fast moving averages are still very bullish alignment heading higher. I would expect this to see some continuation to the upside. USO, this one closed on the lows, down 4.5% today, which is pretty interesting. You gotta wonder if this is some sort of just heavy flush out here at the bottom after such a protracted downtrend. To see this type of expansion to the downside is pretty interesting. I think on a gap down tomorrow, if we did see a gap down tomorrow, I bet you'd see a lot of players trying to catch that potential reversal or try and bid for some type of mean reversion trade here as this really starts to accelerate lower. But the bottom line, nothing's changed here. USO continues to be in very, very tough bear market territory. I don't think I've ever really used that term before, but the bottom line is it's been trending lower, fast moving averages all heading lower, so eventually there will be a snapback. Maybe it'll be tomorrow, maybe it'll be in 2 weeks. It's still pretty much in a void in my book. UNG, we talked about this last week. It looked pretty exciting up here as it was challenging this $14 level, and then really it was this past Thursday's candle right here that it was down some 4 or 5% on the day that really just set the tone to the downside once again. And now UNG finds itself at the lower end natural gas of this range, so you can see all these clusters of tails down here, these previous pivot lows. UNG now needs to try and support that. Natural gas will see if it can hold these lows or if this is going to be a fresh breakdown. You look on a weekly chart, this could be one nice continuation pattern to the downside, so keep that in mind. Coming up, you could see a nice short trade emerge in natural gas. Gold caught a nice bid today as well. See this up 1.33% today, continuing the short-term uptrend that it's been in. You got big 110 round number up here that it broke down from earlier this year, so perhaps that's some type of magnet to retest there. We'll have to see how that one shapes up. Silver, similar situation, nice gap up today as well. 1485, this is where it broke down from earlier in this year as well, so expect that to be a action area if it can get there. Now let's look at some leading sectors out there today. XLU is pretty much the only thing that was green on the day sector-wise. This one continues to see positive rotation into it, riding above all the fast-moving averages. This one's holding up well. On the downside, you saw materials continue to get hit today. This one's been in some pretty bearish formation now for quite some time. You can see all the fast-moving averages heading lower. This one was in trouble. And then energy, which did perk up recently. Last week, we were talking about the positive divergence between crude oil and the energy sector here, the energy services sector. But today, you did see that finally start to break down today as crude sold off 4.5%. We saw almost a 3% sell-off here, coming back to the lows in the energy sector. So definitely both of those weighing on today's markets. Let's look at some individual names now. Apple's first. This one came off 1.25%. Still in a kind of a messy range here. Not too actionable one way or the other. It's holding the recent lows, but it's below the highs from last week and earlier this week. Fast moving averages still heading lower, just not that interesting right here. Google is more interesting, although it did get faded a little bit today. Still positive on the day, so some outperformance there. And you can see, I mean, you got this cup and handle pattern, if you want to call it that, above 695, above 700, above this area right here where it's failed to close above, is definitely an area that could see some further momentum to the upside. Just realize it is still running pretty hot. Fast moving averages are now catching up, but this one certainly after its earnings release and then the split off of the companies that it did has kept Google with a nice bid underneath it, so that one certainly looks interesting. Netflix coming off a little bit today, back below the 8-period exponential moving average, but still riding in a pretty strong uptrend. We'll have to see if buyers once again step in here as it plays around inside of those moving averages. That's what they've done for the past, several months to this entire year, really. So let's see if Netflix continues to find a bid. Amazon is holding up pretty strong. This one's still kind of going sideways here in a pretty well-defined range. I think you got 540 on the upside, 520, 525 on the downside, and I think you can use those levels right now to get yourself in and out of any of those trades. Facebook, this one held up well today as well. Added slightly to yesterday's gains, still a tail on the top end here. Buyers still in control. Fast moving averages are below supporting price, so look for this one to continue to chop around with a slight upward bias. Still pretty messy, nothing too actionable for me just yet. Really, it's got to get it back above $97 or so to get interesting and clear some of that overhead supply out. Twitter, this one rolled over today, heading back to these lows that it made back in earlier this month on the 7th. Closed up just a little bit off the lows, but still you gotta wonder if it wants to really retest these levels down here sub 27 before we can really think about a double bottom or some type of short-term bottom or base that it needs to carve out. Fast moving averages still heading lower, so still a very damaged chart. Not too interesting in it one way or the other. Alibaba, this one coming back down to its earnings lows that it made. These are it is an all-time low for Alibaba, all-time closing low today. Of course, the ultimate lows are down right around $71. So, the bears are still in control here. So that's where I'd want to be. I wouldn't be too interested in trying to pick a bottom in this one right now. GoPro, this one sold off hard today as well, down 5%. Retesting, getting close to the lows here from the 12th. This was last week's lows, and there's a lot of air in here. So really, if it breaks that, I mean, $50 is certainly in the books here as it tries to find its footing. So GoPro needs a little, needs time for me right now. Definitely the bears have the ball there, so it's just an avoid. Tesla saw some selling action today, down 2.09% on the day. Giving back most of yesterday's gains. The fast moving averages are below price, but you still see that the fast moving average, the 8 EMA, is still below the 20 period, so trying to catch up with this big downside move it had on earnings day down here on the 6th. So price is still trying to stabilize here. Just a messy chart just now in general. 256. Let's see how it acts tomorrow. It's been in the short-term uptrend, this bounce. Let's see if it can hold in there and see where it goes next. Sort of a wait and see right now in Tesla. Now let's look at just a couple of long ideas I have on the table here. SO is one. Utility sector, strong sector out there right now, seeing a lot of rotation. This one trying to get back above these recent highs, above all the fast moving averages, above 46.50 or so. Look for some continuation there. GRA, we talked about this one the other day. If you look at a weekly chart, you can see the base that it's been in. Tried to break out. It's trying to break out this week. Gave a little bit back today, but look at the nice tail. So the buyers stepping in here and buying some of the dip earlier in the day today. So let's see if we can reclaim 104, get back to the weekly highs. This one looks like it could be in motion, especially if you look on those weekly time frames, a slightly longer time frame. Then finally, INTU, Intuit Technology. This one looks pretty good, not quite ready yet, but if you look at a weekly chart, you can see what I'm looking at here. This 107 resistance, 107.70 or so. It's been grinding up, so it might need a little more time here, but it did outperform today, so I'm keeping an eye on this one. If this can see a breakout later in the week or early next week, I think this one could be interesting for some follow through to the upside. And that is all I have today. Thank you for bearing with me. I feel like my voice tried to hold in there for most of this, so thanks for sticking with it, and as always, I will catch you next time. Thank you for watching.